Let's look at sole proprietorships first. It is the simplest business entity. No formal state registration is required, although some states allow a person to register a trade name under a DBA or doing business as name. Because of its simplicity, organizational costs are usually minimal, and net income from the business is reported on Schedule C, which is included with the taxpayer's 1040 return and becomes his taxable income from the business. A sole proprietorship is an organization comprised of one person who operates a trade or business to which he contributes money, property, labor, or skills, and expects to make a profit from the activity. In order to qualify as a business, the taxpayer must be regularly and continuously engaged in the activity for a profit. There are many advantages of a sole proprietorship, and they include the ease of formation, low organizational costs, and the fact that profits are taxed only once, and that occurs on the proprietor's own tax return at whatever his tax rate is. It's easy to dissolve. Simply cease operations. The owner is able to make independent decisions. He doesn't have to obtain approval from anybody. There are also some disadvantages. Sole proprietors assume all the risk and have unlimited personal liability. In most cases, this means that the owner risks all of his personal assets, whether used in the business or not, to satisfy the business's debts. It is often more difficult to raise capital for a sole proprietorship than it would be for a corporate entity. And a sole proprietorship does not have a separate legal status, so the proprietor's personal assets could be lost if the business fails. Another perceived disadvantage is self-employment tax. A sole proprietor pays the tax required for both the employee and the employer. As a side note, you should know that banks usually require new business owners to personally guarantee any startup business debt, even if the entity is not a sole proprietorship. Consequently, most startup owners will be personally liable for the company's debt regardless of the entity form. In addition, insurance can be expensive. Although the sole proprietorship is easy to discontinue, it is not easily transferred, in full or in part, to another owner. Upon the owner's death, or if the owner decides to abandon or sell the business, the proprietorship ceases to exist as a legal entity. As the business grows, the owner may wish to change its legal form to a partnership or corporation to allow for additional owners. However, it is possible for a husband and a wife to be considered partners in a sole proprietorship.